Okay, hello and welcome to this price ladder video. I'm going to be going through a breakout example, and specifically I'm looking at a pattern play. So this pattern play is the wedge breakout. And like any sort of breakout, we're looking for very similar characteristics in the price action, but first and foremost, before you can understand the before you can look at the price action, you have to understand the nature of this pattern and how it works in terms of what you're looking for, where you're looking to get in and take part in the order flow. So with regards to the actual pattern, the wedge is basically like any other pattern that we've talked about with regards to breakouts. So really what you're looking for is range contraction. So we're looking for range contraction. And specifically, we're looking for the range contraction to take place where the market makes a lower high but also makes a higher low. And in that respect, so if we drew out a market that was trending lower, made its low, then moved higher, made its high, so something like that. And in this kind of example, you can see very clearly the formation we're talking about is this formation in here. Just to draw that out for you guys. And specifically, the highs, we said this high here, high 1, this is high 2. So high 2, H2 is lower than H1, so this is lower. And then very clearly and logically, L1 and L2. So L2 is actually higher than L1. So this is specifically what you're looking for in the pattern, where the market creates some sort of consolidation pattern or range contraction. Now within this you can have inside days, you can have three bar triangles where the previous day's range is within the 2-day range before that, or you could have a number of inside days and R7. There's loads of different ways to call these patterns, but first and foremost, the principle behind it is that we have range contraction. That is common in all of it. You've got an expansion, price discovery gets into an area, and then you have range contraction. So usually what you're looking for in these kind of patterns, the best sort of breakouts on these patterns, is when you're looking to go with the trend. And in this particular example, as you can see, the market moves in to this area from the upside. So we have a downside trend. The market consolidates within this bracket, and we're looking for breaks to the downside. Now you could also get breaks to the upside, but they're just not as likely to work because the trend is already to the downside. So usually if we're moving to the downside and we have that wedge formation, yes, there could be a reaction through it, a good reaction through it, but then you might be looking to actually see if there's any sellers to take that back into the wedge formation. That's a completely different pattern, and it's more of a false break pattern that we're looking at. We're just looking for the clean break. And obviously, likewise in an uptrend, it would look, very similar, something like that. Not as good in this situation. This high would be a little bit higher than that, but essentially you get the pattern where you've got a lower high and a higher low. Very similar. Again, you can see H1, H2, L1, L2 in these little regions in here. So very similar, and you'd be looking in this scenario for a break. We're just going to move to the upside. We're looking for a break to the upside. So that's more or less what you're looking for in terms of the price structure. Now, in terms of the example, I don't want to go too much through the actual pattern plays out because we're not looking. This is not a strict technical analysis course. We're really just focusing on the price action. Hopefully, as you guys can see in this whole course. So what I'm going to go through is actually just jump into the example. And what we're looking for, and what we're looking at, sorry, is the Bund futures on the 31st of August 2015. Now, for those of you that have gone through Module 9 already, which you shouldn't have done, but if you have, this is actually, you will notice that this is actually month end because it's the last day of the month, last trading day of the month. And traditionally, what we look for in the bond space is month-end extensions. And with month-end extensions, you're traditionally looking for a buying opportunity. Now, what we're going to see in this video is actually that if you were just paying attention to the price action alone, there was actually no indication for that throughout the video. And I really want to make a point here that some people get caught in a bias or a trade setup, but if they watch the price ladder and read the order flow, read the tape, that gives you all the information you need. You don't need any more information. And if you were just paying attention to the price structure, you would have noticed that it was looking set up particularly for a move. Now notice, just as I said, if we look at the structure of the market, we had moved into this area, we'd bracketed, this was our move up here, and notice how we've got our wedge formation perfectly set out for us. 52s, 37s, 38s, and 50s. And we've got high 1, high 2, low 1, low 2. Low 2 is higher than low 1, and high 2 is lower than H1 or high 1. So in this, you can perfectly see the market has come into an area with a trend and consolidated and created it's done quite a bit of volume in this area as well on the composite. So this market's actually contracted and it has a lot of energy now and potentially could see a very good break. Now if we just look at the metrics alone, the areas that we're going to be looking at in the video and the areas we want to be paying attention to, the most important area is obviously the break of this actual trend line to the downside. If we put it in, you can see that comes in at around 55s, 54s, just around there. Just around 55s, 54s on that candle, we come into the trend line. So we'll just note that this area in here, 55, 54, is where we come in to the trend line. And then the next level we're looking at is these 153.50s, that fractal low, and the 153.38. So these areas, these three levels, are the areas we're going to be looking at very intently on the price ladder and see how the buyers and sellers interact these points. So let's just pull that up and see what that looked like in terms of price action, pure price action. So we're actually starting this replay video at around 3:30. Sorry, 3:50, 3:51, 3:52. And usually around these times between 3:30 and 4 o'clock, and especially between 4 and 4:15, is when traders, short-term traders, are looking for buying opportunities. Now, month-end extensions and the month-end flows, there is some people will say there's a specific time to when you can do these trades, and sometimes they work, but I find that the absolute best opportunities are all within the ladder. If you can recognize the buying opportunity on the ladder, that's where you need to get involved. So those people that are lazy and just want to trade it in terms of just buying at a certain time will have already gotten long now. So they're already long in the market, and we have to take that into consideration because that's part of the context. Now notice how the market's now moving towards these lows at 59s. We're trying to make a new low here, and like I said, there's already probably some people that are already long the market. We want to pay attention to what it does around these 53s, 53.55s, and 53.54s. Notice big bids stacked in front of these areas, 56 and 55s, 300 and 400 lots there, and we also want to see what happens at 50s and later down at 38s. So let's just watch this price action, and hopefully we can ascertain something from it. So far, from what I've been seeing, I haven't been commentating on it, I haven't seen any big clips come into the market as of yet. We're seeing 5 and 10 lots come in. Nothing really to excite us yet. Nothing really to say, okay, there's a buying or a selling opportunity here. On both sides, we're just kind of auctioning, but we're statically sitting towards our lows, just above our lows at trading 62s with our lows at 59s. So we're trading 61s here. You can see the clip sizes around 5, 10, and then we just get one big clip of 100 lots. 106 lots just went through there. 106 lots at 61s. Now remember that, because obviously that's the first indication that we're getting a bit of selling here. Now, potentially, there could be some more selling behind that guy at 61s. We're not going to take part just yet because, like I said, on month ends, the context is already to buy. So I'm not looking particularly to sell it at this point. I'm just looking, and if we do break the wedge, then I'm actually looking to be a seller because if there's volume, potentially a lot of these buyers are caught. So I'm looking around these 61, 62s. It seems like the market can't really find a bid there, and we're seeing some bigger size come to market. A 500 lot just sitting at 60s. He's come to market and he's trying to push this a little bit lower here. It seems like someone's trying to get filled. We've got a 480 lot there at 58s. If we can take this guy out, maybe we might actually, you know, do some damage here at 55s. We're going to stay very ready just in case some volume comes into the market. We're hovering over the offers or the offer side of the market at market. So if something comes in quick, we can react quickly and sell at market. So we're just trading at 56s here. Not much on the bids to hold it from going. So we have to be very, very attentive because before we had about 400 lots and 300 lots here, but this is looking just as, just as the average price on the bids is just as much as almost any price except for 50s. Notice 50s is a 700 lot, just sitting in there. So now I'm sitting on the offer side, just making sure that if we do get any sort of selling come into the market out of nowhere, I'm trying to stay involved. And 9 lots just come there at 59s, 2 lot there at 58s. We've just gone bid, trading 61s here. 78 lot just taking it offer at 59s. 156 lots just bought into 59s, and it's reloaded. That's a good sign for the sellers. Actually, someone stepping in and selling, reloaded at 59s and come to market now. If he has to get more work done and he does it through 55s, I'm going to be looking to sell with him on the break of that wedge pattern. So we've just gone offered 57s. If we go offered 56s and 55s, I'm selling at market at 54s, 53s. So we just trading 56s here. We've just gone off 56s. I'm selling 54s and 53s here because we've just gone offered their prices. I'm just gone in, actually getting a little bit more size now. That's a little bit scary for some people that I'm short at the lows, but I'm counting on the fact that there's volume behind me. There's actual flow, and at 55s we've melted. We've literally left. This is what we call a low volume node right in here. A very low volume node, LVN. The market's come in, and where we should find support, we've literally melted. And now notice how we're doing more volume at the lows of the day, and we've just taken out those 50s. Those 50s have just gone, and we're trading 44s almost instantaneously. Now notice, guys, it's very important you notice this. The price character. Take a note of this. I'm going to say a few things, but also take some notes yourselves on what has changed since we were trading around these 61, 60s to where we're trading now. There's an acceleration in the price action. We're seeing higher than average volume going through on the break. There's one-way order flow. There's no one really stepping in to buy this. It's one-way order flow. The market's moving down with aggression, and people are hitting market with size. Look at the clips that we're getting down at these levels. So you see an acceleration in the order flow, and now we're trading just ahead of these 38s. Remember, just because we're on side here doesn't mean we're not willing to add more. We're seeing the volume, we're seeing the flow. If we can take these 38s as well, we're going to be looking to get involved. Now notice, we're seeing some sort of spoofing here. 600 lot, 500 lot coming in. They're trying to get filled on the offers here probably. So if any of you guys have gone through the spoofing module, you'll notice on the bids, we're seeing guys come in with big size. Look, 600 lots of 40s. And when we trade close to him, we trade actually into him. Look, we're spoofing it again at 41, 700 lots. Coming in at 41s. And then when we get close to him, he vanishes. That means someone is trying to get filled on his offers here. So I'm going to try and play with that. I'm going to try and play with this. I sell another 20. And if we can actually sell, if we can actually go offered through 38s, I'm going to get really heavy on the short side because in this case scenario, I'm looking for some really big flushes. Remember, everyone's caught in this bias of buying the market on month ends. And we've broken a very key pattern. The real confirmation of the pattern comes when we break 38s. We've gotten the first confirmation in the break of 50s. We're coming through these 39s. Very little on the bid here. There's something at 37s. No one really there to hold the market up. So I'm selling at market here because there's very, very little on the bids to actually hold this market. And every time we get to a big bid, it literally vanishes. Okay, so I have sold 37s here. I've sold 3 clips at 37s. I'm going slightly offside on that, but this spoofing right here is actually keeping me in this trade. If this goes any higher than 41s, I'm out of those clips, and I'm letting the other ones run. But as you can see, that guy immediately, as it comes down, as it comes into his offers, can't get filled any more size, so he comes to market. And look how quick and swift the move we're getting here. The move is getting a lot more aggressive. We've just seen a blip, so I'm going to cover as much size as I can into that blip. Um, didn't quite get that last 10 lot, but I was looking to cover into that blip because usually on any sort of blip, the market's probably overextending the move that it just did. So we didn't manage to get filled um, on the full 40 lots that we were trying to get out of the market with. We're still short 50. So we'll try and get out just ahead of this 800 lot, even though I probably think this guy's fake as well. But we're going to try and just scale out a little bit more size here. Just massage out of this position a little bit because we've seen probably a little bit more of an overextension that we, you know, than what's healthy for the trend. Usually, when the market's trending and it's moving in a direction, the best sort of trends are when it just ticks and goes, but it picks up volume slowly but surely. You don't want to see big flushes of volume. Because that's not necessarily people actually actively getting short, but more like longs liquidating very quickly. So in the process now, we're seeing um, the market's just taken a bit of a bid here, gone up about 9 to 10 ticks from 23s. We're trading up at these 31s, 32s. Notice the market slowed down just a little bit. It's catching its breath. It's just seen a pretty big move to the downside, so it's trying to find its bearings here. It's trying to see, is there further flow to this? Everyone that's gotten along the market now is either really offside or has had to sell at market. And it's probably a very large liquidation that we just saw in there. You know, when you see these sort of blips, it's probably because someone's liquidating and getting out with desperation rather than someone really having to get short. So the initial move, as you can see, is when people are positioning, it moves a little bit slower and there's a lot more volume. And then when we finally start getting these blips, that's when everyone that's caught long starts liquidating. So let's just see how the market interacts around here. We're seeing a bit of a buyer step in around these 24s, 25. I'm going to try and scale out a little bit more size here because I feel as if maybe we're a little bit overextended here. We'll try and cut out another 5 lot in here. So we'll stay 40 short. If we see any sort of price action again, we're going to try and get involved. Maybe possibly even add to the short side again if we see that sort of price action. At the minute, you can see the best bid and the best offer are actually relatively thin. So there's nothing much. And the bigger size is probably about 2 to 3 ticks away. So we have to see how the market interacts when it gets to these areas. You know, when it gets to these, let's say 25s, 24s. Now when it gets to these 21s and maybe even these 18s, notice a bigger bid at these 18s. So what I'm going to do is I'm actually trying to scale out another 10 at these 19s just ahead of these 18s because we're seeing a little bit of a bigger bid there than usual. And notice again, the bigger offers, it's 26 and 27. So again, you can see as it comes up to these areas, it finds an area to bounce off of, and it bounces off of these 25, 26s, trades 24s, 23s. And usually when the market starts thinning out a little bit, you'll notice that generally when it's thinning out, there's probably just a few market making algorithms in the middle trying to make a market at the best bid and the best offer, and everyone else at all the other prices, the bigger size is a little bit further away from market, when really if those market making algos weren't there, there'd probably be maybe a 3 or 4 tick spread, sometimes even larger than that. So really you got to pay attention to the order book when it thins out a bit, where the size is. So like I said there, we saw the 18s, it was the size on the book. We got out at 19s because we didn't want to take a chance. We probably could have gotten filled at 18s, but you want to front run that size just in case. Just in case you don't get filled at 18s, why take the risk? Like some people say, don't be a prick for a tick. Well, actually, it's a little bit more vulgar than that. It's don't be a dick for a tick, but in any case, you get the point. If you see size in the book, try and get out ahead of time. Be the smart guy in the room. So as you can see here, we've just gone off for these 19s. It seems as if we've done um, quite a bit of volume at these lows, so I don't necessarily think we haven't seen any sort of auctioning off of these areas yet. So I haven't seen any sort of proof that this could be the low yet. So I'm waiting for some big clips to come in at market from the buy side. Someone to come in and say, "Hey, this is way too low now," and start buying some decent sized clips at market. We've seen a 50 lot just come through there at 16s. That's one decent sized clip, not a very big clip, but I'm looking more for a 100 lot of 200 lot. See another 50 lot just come in there around 20s. So around this area, it seems as if the markets tried to auction off of this area. So what I'm going to do is actually try and bid this area with some 5 lots here, and hopefully we can just get filled on some of these lots as we start coming off, because it seems as if the lower we go, we're getting some bounces. We might be coming into a bit of a low somewhere around here. Now notice there's a big bid sitting at 10s. As we did before, we're going to try and cover, we don't know if that's a low yet, so we'll try and cover 5. And if we'll leave another 5 on if we get there. And potentially, if it does keep going, well, then we still have our 5 on. If it doesn't, well, we can get out a little bit higher. But again, there you go. You get your 5 out just before we take out those 10s. Those 10s did get taken out, even though it doesn't show up on the actual volume profile on the right here. Now remember, we're having some issues with the MDI feed. So actually, some of this volume profile is a little bit off. It could have been that 1,000 lot was actually taken out. If I remember correctly, I think on the day someone did take out a pretty big size of those 10s. But in any case, you could see we just had a small little bounce there, and then the sellers just stepped right back in with aggression. They cannot stay off of this offer. Again, everything that I've been saying before, I hope you guys can see. This is one of the most violent breaks that I've probably shown so far. Hopefully you guys can see the difference between the price action we saw before and what we're seeing now. When it starts breaking, when we start seeing the flow come in, it's literally one-way order flow. There's no one stepping in. Now this is actually a decent bounce after what we've seen so far. So really, what I'm going to try and do here actually is try and get out a little bit of size, because we've seen a bit of a bounce. Those 14s was the area before we had the low. We had a lower 14s, we came bounce, and then we just blipped through those 14s down. So I'm looking to get out somewhere around this area here. I think I might just get out these 14s because we've kind of had a little bit of a false break at that little level. But in any case, we're fully out of our position now. We've taken our full trade. This could continue going, but this is the first decent auction we've seen of more than 10 ticks, from the lows. So there could be some buying. As you can see there, 187 lot just came in at market and clipped, lifted the offers. 75 lot there. There's a couple of more buying clips coming in now. So as you can see, when the low is made, we're starting to see some auctioning. Some buyers come in and actually lift some of those offers. So let's just run through. This is obviously one of the longer examples that I've done, but again, I just want to go through just a couple of the observations. Very few observations that we saw. So observations. This is basically what we said. It's going to be a very much a reiteration. So higher than average volume. That's one major one. When the volume picks up, that is when you're starting to see possibly a decent break come to fruition. Like we said before, one-way order flow. We don't want to see the buyers fighting back. If it's a decent break and if it's a strong break, we want the sellers to have full control of it. They have full control. They're taking over territory. They're moving to the downside with aggression. And with that, like we said, aggression, we want to see an acceleration in the order flow. And we saw that. Remember, Where do we see that? If we look back on the order book and we play that again, if you can go play this video back, you'll notice very, very clearly, I mean, when we took out these, when we took out, um, let's just, when we took out these 55s, we had an acceleration lower, and then we took out these 50s, an even bigger acceleration, and then ultimately when we took out these 38s, the price action in through here completely changed. So the lower we're going, the more volume we're doing. That's what you want to see. You want to see as we're moving lower, we're seeing more and more volume. So part of this, I know this is higher than average volume, but actually when you're seeing a trend-like move, you know, something that fits in with this is actually volume increasing with the break. That's, you know, with the breakout. Very, very, very key and very important move, important part of what what you're doing. Now, obviously, strategy-wise, it is a bigger time frame structure. I couldn't quite tell you specifically how to trade every single. There's no mold to trade every single um, wedge break. The context of the market's going to change completely. But strategy-wise, obviously, if I just had to put very, very simply, we were short. Basically, let me just move that. We're short when the trend line price, which we had was 55s, when offered. So when that price went offered, 55s, especially 55s, 54s, we were hitting 50. So we hit 53s. So we're aggressive. We're at market. We're hitting at the lows of the day. And it's very uncomfortable, but you have to be hitting at the lows of the day. Your risk on this trade is literally maybe 2 or 3 ticks above 55s. So I mean you're risking literally about 4 or 5 ticks. So your risk theoretically, now this is all price action dependent. If there's a seller there and you can see the sellers coming in at 58s, 59s, maybe you might have to take a little bit more heat. It's all contextual. It depends on the market, on how the market's structured. But your risk should be, so instead of is, should be, I'd say a couple, maybe 2 to 3 ticks above 55s. And that, it's very arbitrary, but it's really down to the price action. If buying comes in, if someone's clipping size at 56s, someone's lifting 100, 200 lots at 56 and 57s, well then I'd say maybe you should be getting out there. But if it's going bid 56s and then someone, so if we just show this on the price ladder up at this area again. So if it's gone, and this is meant to be, I'm trying to draw in bids here. So let's just say it goes bid 55s, right? And these are all your bids now. If it goes bid 55s and someone's buying 56s at market, and now these are all your offers in here. Someone's buying 56s, but we're seeing reloading. If you see reloading or absorption, well, you don't want to be getting out 56 or 57s. Yeah, you might be offside because you sold 53s. But if someone's reloading at this price, then you've got a chance for this to still work. You say, okay, if this guy's reloading, I don't want this to trade 57s. If it trades 57s, if it goes bid 57s, I'm out straight away, 57s or 58s. If it goes bid 57s, you have to be getting out 58s. But if the reloading is taking place here, this really shouldn't be trading 57s. It shouldn't go bid 56s. So really what you're doing is analyzing where the buyers and where the big buyers and sellers are on the break to the downside. You're analyzing where the big seller is, and you want to stay in front of that guy. So long as he's there, you want to stay in the market. If he vanishes or if he comes in a lot higher, well, maybe you can get out and try and get in with him as he comes in later. So more or less, I said you want to try and keep your risk really tight. Remember, with this, you know, if you're aggressive in, you have to be aggressive out. And your reward ultimately in target, it really does, again, depends on the context of the market, how far you, um, you know, where the next real area of support is, where the next real um, uh, price base or whatever it may be. But really, price action wise, you want to see price action wise. Like I said to you before, when big buy clips come in. So, like I said before, you start seeing a 100 lot clip at market, 200 lot lift at market. If you're not seeing those big clips come in and it's still one-way order flow, stay with the flow. There's no reason for you to get out. And it might feel a little bit uncomfortable, and you might be itching to get out of the trade because you're like 10, 20 ticks on side. But if the order flow is still there, stay with the flow, stay with the trend. There might be more to make out of this. Okay, so that's pretty much the example I wanted to go through. Very, very long and in-depth example, but there's a lot of price action, a lot to talk through. Hopefully, you guys learned a lot from this one, and I'll probably upload a few more breakout strategies. But yeah, if you do guys have, if you have any questions or anything, you can hit me up um, either via email, or you can hit me up on Twitter. Um, I'll give you my. You should already have this, but at MVS underscore Futex Live is my Twitter handle. So thank you very much for listening, and stay tuned for some more price ladder examples.